Good day, ladies and gentlemen, and welcome to the BG Medicine Q1 2015 earnings conference call. At this time, all participants are in a listen-only mode. Later, we will conduct a question-and-answer session, and instructions will follow at that time. If you require operator assistance during the program, please press star then 0 on your touch-tone telephone. I would like to introduce your host for this conference call, Dr. Paul Shermer. You may begin.
Thank you. Good morning, and welcome to the BG Medicine first quarter 2015 earnings conference call. I am joined today by Steve Hall, Chief Financial Officer, and Aram Adorian, Chief Scientific Officer. Steve Hall will now read a brief statement and then review our financial performance for the quarter. Steve?
Thanks, Paul. Good morning, and thank you for joining us today. Before we begin our formal remarks, I will cover a few administrative details regarding the replay of information for today's call and forward-looking statements. Today's call will be recorded and a replay will be available on our website. The information to access the replay is available on our press release and also on the company website. As a reminder, today's call contains forward-looking statements regarding events that involve risks and other uncertainties. The company's actual results may differ materially from those anticipated by our forward-looking statements. The risks and uncertainties are set forth and discussed in the company's most recent annual report on Form 10-K, as well as updates to those risks and uncertainties that may be filed by the company from time to time with the Securities and Exchange Commission or otherwise made public. I will now provide a summary of our financial performance for the first quarter ended March 31, 2015. Total revenues were $437,000 for the first quarter of 2015 compared to $739,000 for the same period in 2014. The decrease in product revenues resulted from a $353,000 decline in orders from our largest clinical laboratory customer and partially offset by increased sales across all other laboratory customer segments. In the first quarter, we continued to aggressively manage our expenses. Operating expenses for the quarter declined by 37%, or $894,000 from the prior year period. Operating expenses were $1.5 million for the first quarter of 2015 compared to $2.4 million for the same period of 2014. Research and development expenses decreased $77,000. Selling and marketing expenses decreased by $496,000, and general and administrative expenses decreased by $321,000. Net loss per share in the first quarter was reduced 50%. Net loss per share was 4 cents per share in 2015 as compared to 8 cents per share in 2014. The net loss was $1.3 million in Q1 2015 versus $2.2 million in 2014. Net cash used in operating activities, or operating cash burn, for the quarter decreased by $1 million, a 42% decrease to $1.4 million compared to an operating cash burn of $2.4 million in the first quarter of 2014. As of March 31, 2015, we had $1.6 million in cash, and our long-term debt was $1.9 million. On May 12, 2015, we entered into a securities purchase agreement with certain of the company's principal stockholders. Pursuant to the terms and subject to the conditions contained in the purchase agreement, we issued and sold to these shareholders secured convertible promissory notes in aggregate principal amount of $500,000. In addition, and pursuant to the terms of the purchase agreement and subject to the approval of the company's stockholders at the company's 2015 annual meeting of stockholders and the satisfaction or waiver of other closing conditions, the company has agreed to issue and sell to these shareholders $2 million of shares of newly created Series A preferred stock of the company at the second closing to be held following the company's 2015 annual meeting. For more information regarding this financing, please refer to the company's current report on Form 8-K. As part of our outlook for the balance of 2015, we expect to reverse the sequential decline in revenues that we have experienced over the last 3 quarters. The factors that contribute to this view are: 1, orders from our largest clinical laboratory customer appear to have stabilized. 2, we are experiencing modest revenue growth from our sales to the majority of our clinical laboratory customers. 3, although sales related to independent research studies are difficult to predict, we are currently experiencing modest revenue growth from this segment. And 4, we anticipate recognizing incremental revenues from the U.S. market introduction of automated galectin-3 testing in the latter half of 2015. For the full year 2015, we expect to decrease our operating cash burn as compared to 2014. We believe that closing on the $2 million second tranche of our May 12, 2015 private placement financing, subject to the receipt of shareholder approval, will extend our runway into 2016. This concludes our financial review. I'll now turn the call back over to Paul Filmer.
Thanks, Steve. Here are the key takeaways from our first quarter of 2015. 1, in anticipation of the U.S. market launch of the Abbott Architect Galectin-3 assay, we updated our agreement with Abbott, thereby paving the way for U.S. market introduction of the first FDA-cleared automated test for Galectin-3. 2, we now expect to reverse the sequential decline in revenues that we experienced over the last 3 quarters in light of growth trends relating to the BGM Galectin-3 test that we observed during the quarter, and our expectation that we will recognize incremental revenues from the U.S. market introduction of automated Galectin-3 testing in the latter half of 2015. 3, we continue to manage our operations very aggressively, as reflected in a 42% reduction in operating cash burn. 4, we have filed a 510(k) pre-market notification with the FDA to obtain regulatory clearance in the U.S. to market a new indication for clinical use of the BGM Galectin-3 test. Concurrently, interest in the role of Galectin-3 testing in cardiovascular disease and related disorders remains high, as reflected in the publication this quarter of 20 papers in peer-reviewed medical and scientific journals and presentations made at the annual meeting of the American College of Cardiology. 5, we closed on the first tranche of a financing to provide resources to continue our operations and grow our business. We believe that closing on the $2 million second tranche of our private placement financing, subject to receipt of shareholder approval, will extend our runway into 2016. 6, we continue to explore strategic alternatives that could include, among others, raising additional capital, strategic partnerships or alliances, a merger or sale of the company, or other possible transactions. That concludes our formal remarks. Thank you very much. Kevin, we're now ready to take questions.
Ladies and gentlemen, if you have a question or a comment at this time, please press the star, then the 1 key on your touch-tone telephone. If your question has been answered or you wish to move yourself from the queue, please press the pound key. Our first question comes from Mark Bussos, a private investor.
Yes, I was wondering if you could tell me, have any of the officers or board members in the recent weeks purchased any of your stock?
No.
Okay. All right, thank you.
Our next question comes from Richard Hertz, who is also a private investor.
Hey, guys. Thanks for taking my call. I had a quick question. I didn't know if you guys could disclose anything about the amended agreement with Abbott, what that entails for you guys. It's kind of vague.
Yes. So let me, the agreement relates to updating, the amendment relates to updating the agreement to reflect changes in market dynamics. Specifically, there is reference to the product fee pricing. While we obviously cannot comment directly on the product fees, as the details are obviously confidential, we can say this. We believe that the product fee structure that we have put in place with Abbott provides an attractive return that reflects the investment that we have made to date in the development of the Abbott test, in promotional activities, and in the clinical validation of Galectin-3 testing. And we also believe that it provides an attractive incentive for Abbott to drive sales going forward.
Great. And just kind of one follow-up question along that. You guys mentioned that you were going to probably be seeing revenue here in the latter half of 2015. would it be safe to say we can anticipate then the actual launch maybe being in sometime in the beginning of the summer here, or maybe July, August kind of time frame? I guess how quick before, once launched, would revenue start trickling on that?
Well, what tends to happen in this particular arrangement is that we look at sales over a certain period of time, and then payment is made later on the product fee. And so there's a certain lag that occurs based on when the introduction would occur, and then based on these measurement dates.
Great. And then one final question. Anything with CardioScore that seems to kind of been forgotten about?
Yeah, so I think as we've said previously, at the current time, we are not, we shifted our emphasis and our investment into the work with Galectin-3. So while we may continue to explore the potential opportunities to monetize CardioScore, we're not actively engaged in its development or commercialization at the current time. Now, one thing I should point out, though, that's important to understand is that as part of the CardioScore process, as you recall, we did take we took the data from the bioimage study and subjected it to an independent adjudication process with an independent group of physicians. We think that the value of this process obviously transcends CardioScore because it relates as a potential value driver for bioimage cohort, which, by the way, we leveraged in the recent FDA submission we made regarding Galectin-3.
Great. Thank you.
You're welcome.
Our next question comes from Eric Zini, who is also a private investor.
Yes, hi. Thank you for taking my question. Well, basically, most of them were answered. I just have one question concerning the latest filing for second indication for Galectin-3 for cardiovascular risk assessment. I just wanted to know if you would provide us with some update on maybe feedback from the FDA, and once cleared, would that pave the way for the FDA clearance of the CardioScore test, since it seems related?
So it's really too early in the process regarding any update on interactions with FDA. It does not relate to CardioScore, the submission. It relates to Galectin-3 in that specific indication, so it would not impact on CardioScore.
Okay, thank you.
You're welcome.
Thank you.
And I'm not showing any further questions at this time.
There being no further questions, thanks everybody for your participation today. Obviously, your ongoing interest and support are greatly appreciated, and we look forward to updating you on our progress. Have a great day.
Well, ladies and gentlemen, this does conclude today's presentation. You may now disconnect and have a wonderful day.